This is London with MarketHedge. Let's pay attention to Bitcoin. We are retesting a level at 107,000. Remember, this account was $10,000. It went up quickly to $233,000. Once again, this is London with MarketHedge. Former hedge fund owner, private, non-SEC, not financial advice. We see the specific pattern that I like to trade quite a bit. Level of resistance is descending. Level of support is also descending. Take a look at this level in terms of that level of support. If we could get along this line here, I know it's a drop. It would require quite a drop, but I'm going to show you with a specific fan dynamic how we could get a little bit lower than where we're at now currently. Bitcoin with a little bit of selling pressure. Let's pay attention to this specific line of cross resistance, support, flip to resistance. We're going to draw out a fan reversal. It is a dynamic that is prominent right now on the charts. Take a look at the secondary. Hit 1, hit 2, flipped into resistance. So a double hit support, flipped into resistance, and you see on that top level, a double hit, really a triple hit, flipped into resistance. So as the specific anchor point here, if we take a look at that anchor point is going one, let me get this line, here we go, one more level down. What's the next question? Well, that's the third level of a support to support cross trend line flipped to resistance. What's in play immediately? You got it right, guys. Looking at this line here, could it be a breaking point with some power to the downside? Yes, but if Bitcoin's technical demonstrations stay true here in terms of every support flipping to resistance, every support flipping to resistance, right? Up and up and up. We'd like to see another drop and up. So it's a great time to schedule in some longs. Let's go ahead on MarketHedge Pro. I'm going to stack some orders. Let's go in. Why don't we do, let's do $1,000 at each level. And I'm going to walk you through the stacking process, okay, in terms of stacking orders, and I'll go over the rationale very, very quickly in terms of why I'm doing it. We'll go with leverage. Let's go 250. I want to see my total. Let's see, the total estimated risk here is 85,000. We're going to go with steps. Let's see if we can raise this to 50. How about if we raise that to 50? We get to 142,000 in terms of my estimated total risk. Now, let me estimate here if I have $50 between each order and I have 50 orders, that's going to give me $2,500 on the chart. 50 times 50 is 2,500, right? Yeah, so if I'm looking at $50 between each level, pay attention, $50 between each level, it's only going to cover me to about here, about $2,500 down. I really want to make sure I'm good for that level of support. So what am I going to do? I'm going to be a little bit more realistic. I'm going to be a little bit lighter. I'm actually going to go to 750. Let's see if I can go to 750, and my gut is just telling me let's go to a clear 500. Let's keep this reasonable. Let's go to 500 and let's put in 100 orders. That way I'm covered for $5,000, and you're going to see I'm going to need to lower this even a little bit more because why? Because I'm at 287. Where's the 287 is the total risk, and 233 is the total account. You see, we've got some. I have some abilities just to adjust this. Let's go to a flat 200. Let's put this at 80. That'll cover me $4,000 down. 80 times 50, meaning 80 sets of orders stacked at $50 increments. Okay, so that's what I'm getting to in terms of the evaluation I'm making. Let's go ahead and execute this long. Now, if I click submit, we're going to get all the orders here. Pay attention. All the orders here are going to pop up. Those are 80 orders. Now, in terms of that execution, in terms of the processing is occurring, and we just there, bam. What are you seeing? You're seeing 80 orders executed in, right? What's the total exposure? The total exposure is, pay attention, total exposure is potentially $183,000. So the account is at risk. Guys, $183,000 if we were to slam all the way down to the bottom level, all the way down to the bottom order, and not recover. So this trade requires a recovery. And why am I stacking? Okay, I'm going to stack because I don't know how far this is going to go down before I get this recoup. I don't know if this is going to be the bottom. Anyone who tells you they know exactly where it's going to go, guys, they're not telling you the truth. It's an unknown in the market, the degree of volatility, especially stacking the specific levels underneath. I'd like to pick up all of the levels and then return to this top. So this is a hedge in that number one. Let's pay attention, pay attention. It's a hedge in that, first of all, I am hedging or making an asymmetric placement of orders. I'm going long while we're breaking down. It's asymmetric, thus a hedge. And second of all, I'm hedging in that I don't have full exposure. You'll notice that each and every trade is only 500 in margin at 250 leverage. So I'm not fully exposed in any one specific order. All of my orders pick up to essentially give me and provide me that maximum level of overall exposure. And that would be as opposed to me just saying, well, I like the trade, let's go long and let's put $183,000 in. No, I've hedged in that context as well, and I have a series of orders that just piece by piece by piece are going to be providing me with exposure, thus the second part of that hedge. So remember, what's the first part of the hedge? The first part is it's asymmetric. While we're breaking down, I'm looking up. Second of all, what is the portion of the hedge or the definition of the hedge? Well, I'm not fully exposed at any one specific level. I get more exposure, right, to it, to the specific move potential as we go down. So in the account of 233K, in the account of 233K, we're not fully exposed at that 183 level. In fact, we're only exposed at that large of a level if we collapse all the way through, which I think is generous, guys. I think that's a good degree of price as we look at the specific. It's going to be the $50 steps, that $50 increment in between each specific order. Okay, that's the $50 in between each order. And then what do we have? We have those 80 orders, right? So 50 times 80, that's going to give me the spread here. 50 times 80, we're looking at 4,000 in terms of the overall specifics here. This is London with MarketHedge. Let's see if we can get a drop. Let's see if we can get along this line of support. It may push this account around, I'll tell you that, or we may get a nice move from a preceding demand zone here to the left. Would really enjoy, guys, if you would leave me a comment, if you would shout out and let me know how your trades are going. This is London with MarketHedge. Let's have a great week incoming. This is the opening, essentially the opening of the week with the Asian sessions. Let's go get it this week. So excited about all the progress we're making at MarketHedge. This is London. We'll talk to you soon. Take care. Bye-bye.